Okay, so hello and welcome to the second episode of Spark Tank. For those who may have missed the first, Spark Tank is Plural's way of bringing in a variety of inspirational discussions to the fore in a canvas that is India's digital payments landscape. From startups to policymakers, we intend to invite them all and converse straight up and get you multiple facets and bites of information about this space product by product. Just like the earlier episode, please drop in your questions in the chat and we'll try and answer as many as we can towards the end of the episode. For today, let's start with a bit of storytelling. More than a decade ago, using Aadhaar for building a digital payments ecosystem in India was still an exploratory conversation. NPCI was still new, although taking large strides in IMPS, NEFT, and RuPay. Cut to 2015 2016, the power of instant payments, mobile tech was recognized via IMPS, though not very scalable. With that problem statement in mind, UPI technology in India was born. Today, the UPI system tackles around 10,000 TPS and over 6 billion transactions monthly, processing 10 lakh crores of rupees every month. The innovation has literally transformed how India transacts across the country. And a very integral part of this journey is the iSpirit think tank, a team that was architecting the India stack, solving for the hard problems, built on top of digital public infrastructure that everyone else can consume today. And here is where I would like to introduce you to Nikhil Kumar, our guest for today. Nikhil is the co-founder of Setu, an API infrastructure company that provides technology tools and services to fintech companies to build financial products of their own. Prior to Setu, Nikhil was a full-time fellow at iSpirit Foundation, where he worked with banks, startups, and developers. So without much further ado, let's bring him in.
Hi, Tanya. Such a pleasure to be here. Hi, everybody.
Hello. Welcome, Nikhil, and so good to see you today. By the
Same
way,
here. What?
yeah, I was just mentioning in passing about all your many achievements. So let me start with the first. How did you, Nikhil, journey from converting your passion project into building the Beam app all in 3 weeks in your 20s?
um, well, I mean, so, a lot many times in life we kind of uh, try to look back and try to find patterns of why things happened. Because at that moment we don't usually realize, the events that lead to, things that happen in my life, in your life. So I've been a big fan of what we call as butterfly effect, where one thing leads to another and another thing leads to another. Uh, I think the one simple theme that I have found is, generally having kida in life, where you're like, I want to do something, I want to do something beyond what I'm doing and stuff like that. And, I think I can probably go back to referring to this, I can see that the kida is what led to one thing to another. And my UPI journey was something like that. And I'll tell you why. Um, in 2016 early, I was working for a startup called Exotel. I never actually was part of the banking world per se. My parents were rural bankers, and when you're growing up in a banking household, the first thing that our parents generation, they always want you to do some other occupation than what they're doing, right? So and it's told, like, you will not be a banker, obviously you have to be an engineer and so on. So I was mostly in the SaaS world. And in 2016, there was an event that happened in Delhi, which is the Startup India event. And it was for Modi ji had invited a lot of startup founders for the first time to Delhi. We went to this place called Vigyan Bhavan, which is generally used to hosting, the big industrialists or the bureaucrats and do events. And in one such, interaction there, I knew about iSpirit because I started my career at Tally, and iSpirit was started by one of the founders of Tally. So I'd known about it, and when I was at Exotel, I wanted to volunteer and pay it forward and do something for the ecosystem. So I walked up to Sharad, who's one of the co-founders at iSpirit, in a line, and I said, Sharad, I'm so and so. I work at Exotel. I have Kida, so I want to do some volunteering. Can you help me? Can you give me something to get started with? Um, so I actually first started with GST and system. The GST tax system in India is actually built as open APIs because I'd worked at companies like Tally and Intuit. I knew what the Indian SME slash accounting software ecosystem looked like. So I worked on building the developer ecosystem for the GST APIs. So I did a workshop with the Ministry of Finance and the software ecosystem in Bangalore. That went really well. And then somebody who was supposed to do something like this for UPI was traveling. And let me tell you, UPI was not at all a big deal, right? So I was just telling someone, I think 9 out of 10 people were not believers, they were disbelievers. They would say, this will not work, we have IMPS, blah, blah, blah. So I started working on taking the API specs, building a sandbox, and ran a hackathon with the developer ecosystem, which is the fintech ecosystem in Bangalore. And that's how my UPI journey started. I purely did it for the love of, doing a hackathon, building a sandbox, building APIs, and getting people to build innovative applications. Nobody, little did I know that UPI will become this big. So in a very innocent, naive way, I started my journey on UPI. I think 6 months into the journey, where I was working part time as a volunteer, I realized there is massive potential in UPI because it was thought from first principles. It was programmable money. So I quit my job and became a full-time volunteer working on UPI in October 2016. And At this time, I was just creating a strategy document, what to do, how to grow the UPI ecosystem. Just like the consultants, having a strategy framework, what should be done, quadrants, all of that stuff. And demonetization happened in the first week of November. It's one of those black swan moments where suddenly everything changed. The government started focusing on digital payments. It just happened so that we had UPI as a platform already built in India, so it was ready for takeoff. So the government was figuring out ways to promote UPI. And as you know, in UPI, by design, you can have many apps, right? So you as a consumer, you can go to Play Store, you can choose. So the government, when they started promoting UPI, they had a very specific problem, which is people would come back and say, you tell us which app to use. So people were not able to recommend a specific thing. So the government was like, we'll need to have a face for UPI. We can't tell people go to the Play Store and choose whichever app. So let's build something. And if you remember, during demonetization, we were in a war-like situation in India, right? You couldn't send money, you couldn't receive money. There was chaos all around. So there was literally no time, right? Any solution that we were thinking about had to be done yesterday. I was a naive 27-year-old, and when this question came about of what app to promote, the government was thinking about promoting a few public sector bank apps. And I was very particular that there's no way the world will get to know UPI through a bad user experience. So we have to build something. And we were very inspired by what Google does with Pixel. So if you think about Pixel, Pixel always is the first reference user of Android, any new OS that comes on Android. So it showcases the best of what Android has to deliver. So we said, what's the Pixel equivalent for UPI should be? And that's how Beam was born. Um, in typical style, we were, like I said, there was chaos all around. So there was no time. So there was just 3 weeks that was given to us. And I should call out the amazing engineering team that Justpay had. So, we picked Justpay as the partner to build this. And I think the average age of the team was 23, 24. Nobody had nothing to lose. We were basically like, why can't this be done? So we were questioning even everything about software engineering, because you're told that you have to run sprint, you have to do this, you have to do that, and release. And for some of those PMs, who are probably watching this, yes, their production apps can actually be built in 3 weeks and launched. That was one of those. Have I been able to do that afterwards as a startup? The answer is no. But can it be done? The answer is yes. And we work day night. We used to work in these night shifts, ship in the morning, get feedback during the day, take rest, sleep, come back again, start again by 3 4 o'clock, go all night and do it. I think it was just one of those one of those moments, crazy moments in life. I think just thinking about it right now feels very it feels unreal that those things happened. And luckily we launched Beam. Beam was holds the record for the highest number of downloads in the first day of launch, second day of launch, the first 10 days of launch. When you have the prime minister of the country who becoming the CMO, or the brand ambassador for a product, we expected no less. We broke everything. We broke UPI switch, we broke bank backends. Luckily the app was scaling, but unfortunately to the outside world it felt like Beam was failing, right? Because nobody knew this context that UPI, there is something called UPI switch, there is something called banks behind the scenes, and why it is failing. So a lot of the anger was directed at Beam, the app. So I used to do customer support for the first 20 30 days. If you go to the Beam Twitter handle, and if you go to the first earliest tweets, you will actually see tweet responses like, sorry sir, we're trying our best, this is down, we'll come back, and so on and so forth. It was very human led conversation of talking to real users, getting feedback and fixing it in real time. um, I think sometimes being naive, not having baggage is an advantage, and Beam was one such journey. I'd never built a consumer app before in life, but it was once in it was a crazy journey.
No, and what a journey it was. And you mentioned about this kida in you, know, which you continue to have, with which you've scaled Setu as well. So let me ask you a question that could be a kida question. If you could actually redo the APIs that you built for UPI and Beam today, what would you do differently?
There are actually two answers to this. One is, uh, the UPI APIs are actually so beautiful. If you are a developer or if you're a product manager, I'm not saying I'm biased, but I'm just saying, if you really go into the actual API spec, I remember in the original product spec, we'd written a flow, Tanya, where you could send money from your, if you remember, you had JP Miles, right? You had a privilege card which had points. So there is a use case we talk about where you could send money from your JP Miles card to somebody's bank account, right? So and or if you look at the original architecture diagram of UPI, I think, for a fun fact, not many people know why is it called UPI, right? So it's called the Unified Payments Interface, because want there are many disparate payment systems in India. There is IMPS, there is RuPay, there is there is AEPS, there is Aadhaar Payments Bridge, there is star 99 hash. So the technical concept paper that came about was written as the Unified Payments Interface, right? We basically wrote, the Pramod and others who worked on this wrote the concept paper was called Unified Payments Interface. It was never supposed to be the brand name. And this is another lesson for PMs and engineers who are designing products. All of us know that naming projects is so important, right? So for the first 1.5 years, everybody struggled with the brand name UPI. So the protocol was actually designed in such a way that, I think, in my opinion, that we are probably only seeing 10-15% of the use cases that the protocol can actually do. There is so much that can be unlocked, because there are different layers at which innovation can be unlocked. It can be unlocked at the regulation layer, where RBI can do. It can be unlocked at the procedural guidelines layer, right? For example, NPCI said wallets can be part of UPI. Credit cards technically can be part of UPI. Why they are not is a regulatory problem. So I think from the spec perspective, I think it was written 10, 20 years, looking forward 10 to 20 years of all the use cases that could potentially emerge. So I wouldn't probably do much on the original spec itself. However, there was one thing that we probably missed out and which we didn't realize in the early days was disputes. uh, Obviously, when you build a platform, you design it for scale, and especially in a country like India, you would think about this, as internet scale system, and a billion people. I think what we didn't realize is how fast this change would happen. Remember in 2016, 2017, we were still debating and saying cash, 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 we're all fighting cash and so on and so forth. I think if we all look at our own personal lives, the last time, when did you go to an ATM? When did you take out your wallet and pay cash to somebody? Right? And this behavioral change has happened much, much faster than anybody anticipated. So, from that perspective, as UPI is doing now 5.5, 6 billion transactions a month. Even a 1% failure of this is, we are looking at, like, 60 million, 70 million disputed transactions, right? So when you build a system at that scale, I think one of the things that if we were to do this was to design a very good dispute resolution system. There was a dispute API in the original API spec. However, it was not designed for this grievance redressal to be done in real time and so on, because in the cards world, as there is a system called chargeback. It works on delayed timelines. It's not real time. But UPI being a real time payment system, I think if we were to redo this again, focusing on dispute management and building this within the system from day one will probably one thing that where we would redesign this and build it from scratch.
I agree. Couldn't agree more with you. And that actually, makes a lot of sense, because where UPI is today and where it is going towards, disputes is obviously going to be super critical for you to manage at the same scale, or maybe even higher, much, much more higher than what a cards platform today can do in India. And if you look at UPI, there's obviously international acceptance, there's feature phone bills, there's recurring billing, tons of new use cases that is really built on top of this platform that we all saw the growth of. So instant payments can really be taken anywhere. But if it were up to you, what would you focus on and where would you take it first amongst all the new use cases?
Yeah. One of the things about India, and a lot of things that's happened in India over the last 5, 10 years, is India has actually been great in building some of these things indigenously, right? Aadhaar is one of the first systems in the world. UPI was one of the first systems in the world. And whenever such innovation happens, in a developing country like India, the first thing that comes to people's mind is, where else can we take it? Everybody is like, oh, we should take to developing countries like India, right? So then automatically your mental model is Thailand, Vietnam, Indonesia, maybe some African countries, Bangladesh, and so on, because those are our peers, right, from a developing economy perspective. The funny thing about some of the things that we have done in India is, it's just not applicable for, like, email is used in every country. It's just not used in a country, or WhatsApp is not just used in developing economies. Like, it's being used widely in the US, like social media is being used widely there, so on. So I think the first place where it should go is probably to the developed economies, like, US, which is the greatest economy in the world today, as they proclaim it, actually has the worst payment system in the world. And I think if you all have friends or family who are in the US, or if they've come back from the US to India, for them it's a culture shock. They're like, what the hell is happening in India? Like, you guys are moving money like, like the way we like messages, because people still pay their rents by mailing a physical check and so on and so forth. I think markets like, America, UK, France, Germany, all these developed economies are also well suited to adopt something like UPI, because at the core, UPI is actually a payments protocol. So what that means is you can basically leverage the protocol and build applications on top of it. As just to help everybody understand what I mean by this is, you can think about UPI in three layers in which it's come to life for us in India, right? So there is UPI, the protocol layer, which is basically nothing but API specs. The right mental model for this is SMTP, which is the Simple Mail Transfer Protocol, which allows you to send email from Gmail to Outlook, or from Outlook to, let's say, Tanya, to you, to your Pine Labs email address, or from that to my Setu email address. How is this communication happening? How is it that Gmail is talking to Microsoft Teams, right? So this is all happening through the SMTP protocol, right? So similarly, UPI is a protocol at its core. So this protocol can be used by anybody. It is whether a developing economy or a developed economy as well. And build the second layer above it, which is the infrastructure layer, which is basically what UPI as NPCI knows it and and runs it. So this is basically, the infrastructure is basically a switch which directs traffic to multiple different banks and many different parties. Then there is a settlement system which basically ensures that there are settlements happening between various different parties. So that's the infrastructure, or what in the traditional payments world we call as clearing house, right? So that's basically the infrastructure layer. And then there is the application layer, which is what consumers and merchants see, right? The phone pays and the Google pays, or the Bharat pays and the Paytms of the world are all in the application layer. um, so I think every country in the world today has an opportunity to implement UPI at a protocol layer and build their own infrastructures. So, for example, we already know that the real-time payment system in Brazil, which is called Pix, is actually inspired by UPI and is very UPI-like, in its architecture. We know that Google in 2019 actually wrote an email to Fed Reserve in the US to say, look, we've actually been working on this thing called UPI in India. It's completely transformational. Why don't we do something like this in the US? So every country in the world today actually has an opportunity to build a real-time payment system, and they are actually doing it. Right, so Thailand has its own real-time payment system. Singapore has its own real-time payment system. But by leveraging the protocol layer, we can all build these real-time payment system on a common protocol, and this can unlock a very different level of second order effects where money can truly become borderless, just like email, right? So if more and more countries at least adopt the protocol, you can have interoperability between countries, not between, it can be an inter-country platform, not just an intra-country platform as it is today. I think the vision for UPI from a globalization perspective is, this is the opportunity that India can truly be the protocol creator, and many countries can basically leverage this protocol and build infrastructure for their own countries. And because all of us are talking the same language, they can have these second order effects of unlocking global, commerce and transactions, and cross border payments and so on and so forth.
I agree. And that's a wonderful way of explaining the potential of what a UPI can do in many other markets and truly take it global, as you mentioned. So, and while you're at it and you're reimagining, the potential of UPI, I really want to go back to what you're building today. You obviously at Setu have reimagined products in banking, which is way beyond payments as well. Case in point being your deposits, lending, account aggregation systems, DigiSign, eKYC based APIs. So I definitely take it that you believe in the future of embedded financial products. But the job is easier said than done because there are so many banks, there are so many different banking systems, and mostly they're built on legacy platforms. So, how do you propose to solve for bringing in that consistency across multiple banks?
So, I think uh, one of the things for us to, like, in India, for us, the learning has been, a lot of the learnings of what is possible actually has been through UPI. Because, if you truly think about it, UPI is probably the first API based system that Indian banking system is actually seen, right? While we have seen, you know, multiple different payment systems, but they've all been built on like legacy messaging architectures of ISO and so on and so forth. But UPI truly was kind of the first API first product. And there are so many lessons, and I just want to unpack one of those lessons from that, right? Uh, in India, when the government was thinking or the regulator was thinking about bolstering digital payments, getting more and more people to it, there were two camps. One camp of people were actually doing what I call as regulatory innovation, right? So there was a committee set up under Nachiket More. It's called the Nachiket More Committee. They basically came up with a bunch of recommendations on how to innovate on the regulatory licensing layer of RBI. So this is where the payments bank licensing, small finance bank licensing, and so on came about. So if you really go back to 2015 and 2016, one of the reasons why RBI came up with the payments bank licensing, it was written in the name that these banks will be dedicated to building payments infrastructure so that more and more people will come and start doing digital payments. So it was about opening new type of bank accounts and enabling those users to make digital payments. Then there was another camp which was thinking about this from a technology perspective, which is how do we, there are already a billion people who have opened bank accounts. As in Jandan, today I think 700 to 800 million people in India have unique bank accounts. And each of them have basically they've opened it either as Jandan or they would have probably opened it before. So this camp was thinking about from an active user and engagement perspective to say, hey, why should Tanya open a new bank account? How do we enable Tanya to use our existing bank account but deliver a superior payment experience? So what does the problem statement look like? So in India there are so many banks, but let me just simplify it for everyone. There are at least 200 big banks in India which matter, okay, which regional rural banks, payments banks, large banks, and everybody put together. And then there are much more long tail banks of cooperatives, etc., and so on. But there are, let's say, 200 banks. Each of these 200 banks have been built around in, they've had their own evolution of digitization, right? So most of the banking, as we know, has been built around branch banking. The fact that there is IFSC code in payment systems is because everything was built around branch as a system, and your entire banking process was designed around it. So the core banking system, which is the first centralized digital ledger of a bank, which is probably just a 20, 30-year-old concept in many of the Indian banks, was to bring all the branches together and centralize that ledger information. Now, each of these 200 banks have their own core banking systems, have their own evolution of these core banking systems, and the way your ledger is in, say, Canara Bank versus the way your ledger is in HDFC Bank is completely different. Now, to make these two systems to talk to each other is actually a crazy idea, right? Because this is application A, this is application B. How are they going to talk to each other? So the and when you talk to architects and and technologists, the answer to this is what we call as APIs. APIs are basically nothing but software bridges. It basically allows two softwares to talk to each other in a language that both of them understand. So UPI actually was designed as a system, as a layer above the existing systems. So architecturally, you have 200 different disparate systems, but all of them have this thin layer above them, which is called as the UPI layer. And those layers are doing all the orchestration to talk to multiple different internal systems of the bank, right? It could be your debit card system, it could be your core banking system, it could be your CRM, and so on and so forth, and providing this unified experience. So this goes back to basically designing what we call as standard open APIs. So if you have these disparate systems, if we are able to do this API design for payments across multiple banks and multiple core banking system, then you can ask this question and challenge yourself saying, why can't this be done for account opening? Because that's the problem statement, right? There are different bank systems, there are different banks, there are different processes. Why can't there be a unified experience? You can do that for lending, you can do that for deposits. Uh, so that's basically where our inspiration to start Setu came from, which is by, by building a thin layer above multiple financial institutions, you can actually build an orchestration layer and deliver a single unified user experience by building standard APIs. I think it's pretty much possible. Is it hard? It's definitely yes. So it's not as easy as NPCI going and giving specs for banks to implement, but it's definitely not impossible.
Awesome. And so if I were to ask you to reimagine banking completely, I mean redo the whole piece that you mentioned, the legacy platforms, like banking on a clean slate, what would that be?
I think we've heard this theme about, what if a technology company had a banking license, what would you do? And I think it would come down to basically having the right technology tools or architecture, uh, to kind of solve for this. So I think I would reimagine this with a customer first approach by building a CRM and then having an accounting system as the core banking system, because today it's inverted. The core banking system actually acts as the CRM plus ledger, but we can unbundle these two things and have a consumer layer, or the customer relationship management layer, which enables a lot more interaction of the customer, unification of their experience across different banking products, and abstract that CRM to talk to multiple different accounting systems like your lending system or your core banking system and so on. And when you think about this as a digital first system, I've been toying about this idea of cloud banking. What is cloud banking? It's inspired by the idea of cloud kitchens. um, I have a contrary view that at least in the near future, a pure digital bank cannot exist, and I'll tell you why. Let's say, Tanya, you want to go to Europe for vacation, right? And you'll go to VFS to apply for a visa. Now, the guy at VFS will say, Tanya, you have to give me your last 6 months bank statement. And I have to, then only I'll give you visa, because they're worried that you will go to Europe and never come back to India. So they will do income verification. And they need the bank to print a statement, seal on it, and sign on it. So, or you're a small business owner and you are working with a supplier, and the supplier only accepts checks. Now you have to write a check, right? Or you're dealing with some government project, and you'll have to apply for it. So you'll have to probably provide your last 6 months or last 5 years financial statement signed and sealed from the bank. So we have these external dependencies as a consumer, where going fully digital is not possible. So that's one fact. Now, how do you solve for this? So the idea is like the way cloud kitchens operate. So I got this idea, or toying around with this idea of cloud banking, just inspired by cloud kitchens. So imagine in every city there is just one or two cloud banks, which are basically back-end banks. These are not your retail branches, but for example, if you require a bank statement on demand, you basically raise a request on the banking app, and someone, a Dunzo or Swiggy, or somebody like a bank agent, comes and delivers this particular bank statement to you. So this is basically one idea that kind of I'm excited. I mean, like, the fact that you asked this question, if you reimagine banking, I would do cloud banking, and this is what cloud banking would look like. An entire 90% of your account usage operations will happen fully digitally, and just for those 10% physical interactions, you will probably have these dark, in the grocery world we call them dark stores, in the food business we call them cloud kitchens, but you can have dark branches which are probably, in specific CBDs or, residential areas, which basically deliver these services to you.
I love it. I think you should definitely copyright this term. I love it. So, so I think that's awesome, Nikhil. First of all, thanks for sharing these amazing insights. I'm going to move to a fun section. This one is titled Fab versus Fad, and today's topic is ONDC. Many always refer to it as the UPI moment for commerce. So, Nikhil, what's your take on it? Bullish or not?
I'm actually very bullish on this, and I'll tell you why I'm bullish on this. It's more from a first principles argument perspective. I started my career at Tally, and learning India and learning small businesses through the lens of Tally is fascinating. And I remember there was a particular conversation with the founder of Tally, Bharat Goenka. He's a fascinating person, and is probably one of the most knowledgeable people on SMEs in India. People, there are a couple of podcasts that he has done. He's not much of a media person, but you should all, look up and go and listen to him. I remember there was one particular interaction where he was talking about small business behavior, and there was something about pricing and things like that, and he said something very profound, which I remember, that there are only two reasons why small businesses will pay for something, which is, one, if you help them save money, or if you help them make more money, right? Now, if you look from a SME's perspective in India, why do they have, what challenges do they face? The topmost problem for any SME in India is basically getting more business, right? The whole idea of SME is what? To sell more and do more danda. That's why they are in the business, right? That's why they, whether it's a kirana shop, whether it's a D2C brand, whether it's an OEM, everybody is here to sell more, right? The more you sell, the more business you do, the more business you do, the more you grow, the more you grow, the more profits. This is the flywheel. So, in India, if you look at what has happened in commerce, commerce 1.0 in India was brick and mortar, right? So, you would basically, sell your products offline, and, people will come to your store, they will discover, and then you will sell this. Then India went through commerce 2.0, which incidentally was marketplaces. Before India got, if before small businesses started doing, before the D2C revolution started, most of Indian small businesses went into marketplaces like Amazon and Flipkart, because infrastructure for logistics, infrastructure for payments didn't exist. What Amazon and, Flipkart were solving were the logistics and payments and fulfillment as a problem, and they obviously gave distribution to these small business owners, and they were able to do it. Now, and this is around 2014, 15, right? Fast forward 2016, 17, Indian consumers went online, UPI as a payment system came about, and you also had a lot of third party logistics businesses getting built, like Delivery, which just IPO'd recently, Shiprocket, Blue Dart, FedEx, and many other third party logistics companies, which are now available for small businesses to ship anywhere in India. Right. So essentially, India as a country has become a market, or a target addressable market, instead of being locally selling somewhere. So commerce 1.0 was brick and mortar, commerce 2.0 was basically marketplaces, commerce 3.0 was having your own website slash D2C. Now, ONDC will be commerce 4.0. Now, why I think it's not, it is fab and not fud, is because if you think about it, a small business owner is already today receiving orders from his own website or his own interface, and they're fulfilling this. So for them it is going to be a pull product. They would welcome getting orders from third party websites because they've already seen something like this happen on Amazon or Flipkart. Now, what difference does it make to me if, instead of it coming from Amazon, it's actually coming from PhonePe? Instead of coming from, Flipkart, it's coming from, say, Paytm. Because I'm already used to this fact of, getting orders from third party websites or third party platforms. So that is number one. Number two, the goal of ONDC today, on an average, for most categories, small business owners basically pay 15 to 20% of seller commissions to these marketplaces. And ONDC's singular goal is to actually reduce these seller commissions and bring them down from 15-20% to 1 to 3 to 4% on different categories. So if you look at it from a small business owner's perspective, it's a win-win situation. You're getting more business and you're paying lesser commissions, which means more profits and more margins to you as a business. So I think there will be natural pull from the market, and I'm hoping it'll become a pull-based product and not a push-based product. So if more and more sellers decide to come onto the ONDC network organically, because there is very clear value proposition for them, this will basically, take off in a very, very big way. It's and the reason why it's also thought about it as UPI is also something similar, right? UPI brought down the cost of a payment transaction. you know I'm pretty sure you'll remember 6-7 years ago, we would all debate, aha, small merchant will never accept digital payments. In fact, they were not, right? Because they were like, dude, it's very expensive. Nay, I will only take cash. Today, you go to any corner of India, from a tender coconut shop owner to a restaurant to a large brand, everyone has this thing called QR code. I was just reading that there are probably like some 30 million QR codes active in India, and people are accepting. Why? Because the cost of acceptance is become so low. Similarly, if the cost of selling becomes so low, it will naturally become a pull product, and I'm hoping that more and more sellers will come on board, and it'll usher a new wave of commerce in India.
No, I totally agree. And I really think it's responsibility of a lot of technology companies to be able to provide a simplified API and a set of APIs to be integrated into ONDC for these small sellers. So I think whatever work it is that you are doing and a lot of other companies are doing as well is really going to help spark that revolution, the next commerce revolution, as you rightfully said. Awesome. Thanks. Thanks. That's awesome, Nikhil. So we're already about 15 minutes to the closing time, so we'll move to Q&A. I'm just going to pick a few interesting questions, Nikhil. Most of it is around UPI. Let me see how many we can do.
Sure.
Uh, Let me start with the question by Pratyush. Okay, where is that? Yeah. Which instant global payment system, amongst the examples that you gave, like Singapore and Brazil, have covered the gap of UPI, the conflict redressal part that you mentioned earlier? And is it possible to solve this problem now from base zero?
Oh yeah. I'm not fully kind of aware about how the conflict. I mean, like, I've obviously stopped working on core UPI platform since I started Setu, but I know for a fact that NPCI is working on something called the ODR, which is on online dispute resolution. I think Dilip Aspe, who's the CEO of NPCI, spoke about this recently, of basically building this ODR system, and it's actually being piloted with a lot of banks, and merchant acquiring partners on the other side, wherein users can get immediate disputes. So one of the interesting things, early on, when we saw this, and the data is also like 90-95% of disputes can be automated and can be resolved, because a lot of these are just operational inefficiencies. For example, all of us know this issue of, I sent you money, my bank account got debited, the money didn't get credited. Now the question is, where is the money, right? So the money is actually sitting in this one, like I don't know what the banks call it. There is some X account, where there is a lag between it getting credited back. So the money actually never left your bank, it was actually always in your bank, and it just had to credit back your ledger. And this is just an operational inefficiency that exists in the system. So I believe like 90-95% of these can be automated, and I think ODR is basically a step towards that resolution. NPCI is also coming up with a lot of procedural guidelines on having SLAs and TATs for resolution of issues, and and banks have to adhere, or the members of the UPI ecosystem have to adhere to it. So I'm assuming the ODR system, like I said, if we were to start or design UPI from day one, today we will probably build ODR first, because in the early days nobody expected it to scale and go big this fast. Like I said, when we started working on this, 9 out of 10 people said we have IMPS. Why do we need UPI? Today, roles are reversed. IMPS actually, so when UPI was started, it ran on top of the IMPS system. Today's fun fact is actually it's reversed. IMPS today runs on
Mhm.
the UPI platform.
That's
So.
true. Yep, yep, yep. Cool. I'll take another one on UPI again from Mahesh. What are the challenges that you think are existing in implementing credit on UPI? It was discussed a few years back, but there has been no progress by market participants.
Yeah, so this is actually an amazing question. I think if we were to redesign UPI, I think this would probably be one of the first things to consider. I totally missed this particular thing. So Mahesh, what happened is when UPI was designed, it was always designed, at least given India's context, it was designed as a debit first system, or your debit card based system, because in credit card penetration in India, is so low. So it was always designed as a bank account based payment system than a credit based payment system. And generally what happens in a scheme like so Visa or Mastercard is, when a merchant signs up to become part of Visa, the merchant basically signs a blanket agreement, or the network Visa basically enforces the merchant to accept debit card, credit card, and even prepaid as a payment. Or these are the three types of payment instruments or payment schemes that exist within Visa. Right. So when a merchant basically buys a terminal, a Visa merchant cannot say, hey, I'll only accept debit card, I won't accept a Visa credit card, right? So the rules of the network is that you have to accept all Visa cards, right? So what happened in India when UPI is, we basically went and onboarded these 30 million QR codes, like I've said. Now, if and as you all know, today UPI MDR is zero, which means merchants don't pay any money for accepting payments. And generally, for credit card schemes to work, the merchant pays. The whole concept of MDR, the merchant discount rate, actually came from credit cards, right? So Visa built the payment system, entire card system based on these credit cards. So the the principle of MDR is that Tanya, who is basically a consumer, wouldn't have come to Nikhil's electronic shop and bought a TV if not Tanya didn't have, if Tanya didn't have access to credit, right? So the idea is that credit is basically driving Tanya to do more commerce. Therefore, there is more business happening to Nikhil, and therefore Nikhil was willing to pay 2% as a fee for the person who basically gave that credit to Tanya, because there is cost to money, right? There is nothing called free money. That time there is every if someone's giving 45 days of free credit period, that means they have to earn somehow. So the MDR was, today for credit card companies, MDR continues to be 50% of their revenue channel, right? Now, unfortunately, what has happened in UPI, we have onboarded these 30 million merchants slash QR codes. They're all signed up onto the debit card scheme, and they're used to this zero MDR business. Now, if credit on UPI needs to come, we have to solve the business model for credit issuers, which is Tanya's bank, whoever is giving her credit, because they would want MDR to come to them, because you're basically otherwise, like there is, like I said, there is cost of money, cost of time for the money that's being given to Tanya. So there are two models. Either the lender can charge Tanya, like, say, I'm going to give you a loan to buy something on UPI, you pay me 100 rupees extra, or the merchant. There are only two people who can pay, either it's the consumer or the merchant. So, I think getting consumers to pay is, we are in this zero EMI world, etc., etc. So it's not going to happen. So it has to be the merchant. Now, for the merchants to accept credit on UPI, we have to re enroll as per RBI regulation every merchant to sign up for UPI credit scheme. Today, all merchants who have enrolled are for UPI debit scheme. So somebody needs to go out and enable UPI on credit for every merchant, and the merchant now has to agree to pay, whether it's 0.5% or 1% or 2% as MDR for this credit scheme to work. And this is essentially, this is like a business model slash an operational problem, and this is one of the reasons why UPI on credit has not taken off. Um, so a lot of the BNPL companies like LazyPay and Slice are essentially saying, okay, you know what, I don't care about MDR to come. I will basically, the merchant need not pay me any money, and I will let them use my credit line at a merchant network. However, RBI doesn't allow this, so those use cases actually have been stopped. But this is kind of the nuance of why credit on UPI is not taken off.
Yeah, I agree. I think too many participants to again follow suit with a new set of protocols, I guess, is the reason for it. It's not as easy as we would have thought it was.
Yeah.
Let me move to an interesting one actually on ONDC from Sriram. What do you think will be sales generating events like Big Billion Day or Great Indian Shopping Festival for ONDC? Given there's no marketplace, right? Will consumers opt to pay more as against to a discounted price?
Yeah, so this is actually a very very good question, because one of the genesis of ONDC, just going back to why the government started thinking about building an ONDC platform, is because a lot of small business owners or sellers started complaining to the government, the Department of Commerce, of what we call as steep discounting. So what Flipkart and Amazon, or marketplaces alike do is, because of the war chest that they have on capital, their partnership with banks, etc. And because of also the value that they've built of building the consumer and the seller ecosystem, they have this pricing power and the ability to provide these steep discounts. And this has basically driven traffic away from small business owners into marketplaces. Like, your first choice of buying a mobile phone today most likely is going to be going to check on Amazon or Flipkart, and not to your local retail store or your mobile store. So my sense is that the way to probably solve this problem would be through regulations. I know that regulations are generally bad, as the folks in the industry, we fear, and sometimes they might be back in time. But my sense is the way probably this will be solved by the government is probably come up with rules that prevent people from doing that such steep discounting, to create a level playing field. Because there's no other way. Like, let's say if you're a small business owner and you're manufacturing, let's say, USB cables, and you've built a great product, people are paying prices, but let's say Amazon copies that and has an Amazon Basics product, and they do steep discounting. So obviously, they're basically using predatory practices to get more customers to their platform and steal business away from you. Now, I like I said, I want to caveat this with this, that this is not my personal opinion, but my sense is that the way this could probably be solved is through regulation, where there might be some form of regulation to say steep discounting will not be allowed. And I think ONDC will probably usher a new wave of kind of pricing or discounting things to happen, where I think when manufacturers or OEMs come directly onto the platform. We have this concept of merchant subvention. So based on the type of categories, I think the small business owners themselves might be able to probably provide better prices for their end customers. But we'll have to see how will pan out. The other thing about Big Billion Day, or these shopping festivals also, it's very culturally kind of connected to Indian shopping mindset on festivals and so on. uh, I think it'll be interesting to see what innovation the buyer apps will do. So imagine now the Big Billion Day equivalent will probably not happen on Flipkart, but it might happen on PhonePe. And given that they are sister companies, it'll be interesting to see what Walmart's reaction is going to be on Flipkart versus PhonePe and commerce. So
That's such a great point. I think pricing and commerce deserves a separate session of its own. So we should hook you up for that later. But I just have time for one last question. So I'm going to pick a question from Tarun. He's talking about UPI graduating to the next leg and what's really the missing leg, feature phone to offline payments to now digital currency. What do you think is the next step for UPI? Is this the next step for UPI, digital currencies? And how do you see e vouchers or e rupee evolving?
yeah, so one of the I think sometime I'd kind of done a thread on this, that UPI at a protocol layer, like I was explaining, can enable transfer of value from one account to another. In that, value can be in any currency. It could be like JP miles, and it could be INR, or it could be dollar to INR, or it could be like CBD, like a central bank digital currency, to INR, and so on. I think UPI will probably continue to play the role of a payment system unbundled from the underlying currency itself, right? So that's on one side. uh, on the future of UPI, I think the most exciting thing about the future of UPI is actually UPI autopay. As many product managers would agree, from a user experience perspective, the best user experience is no user experience, where you don't, like we talk about single click payment, two click payments, etc. Zero click payments is the best, right? So um, I think if UPI autopay is unlocked for a specific use case called when presented, for example, when you do an Ola ride or an Uber ride, where you don't know when you are going to use it and what the value of that amount is going to be, right? It's the most complex expression of a payment, because you don't know when you're going to take an Ola. You might just choose to do it in the morning, afternoon, evening, and you also don't know where, how it could be surge pricing. It could be, you may never, first of all, you may never get a cab, but let's say if you get a cab and if you go somewhere, there could be surge pricing, so you don't know what your final bill amount is going to be. So bringing those kind of payments into autopay is going to be super key for the next set of growth. Second, autopay can also become a way for you to have specific wallets. For example, Swiggy has Swiggy One, so, or it's a wallet. So you could probably say, keep my Swiggy wallet always at 1,000 rupees, so you can use that to pay. It could even be used by fantasy league companies, where you're buying something, even for e-commerce. For example, let's say Xiaomi is doing a sale, or Google is doing a Pixel sale, or Apple is selling iPhone, just like stock market, right? So today there is one use case where you give a mandate and say, where if let's say delivery is going IPO, subscribe to this particular thing. Similarly, you could probably give a mandate to the commerce company and say, look, as soon as Xiaomi sale goes live, basically buy it, because I've already given you authorization for that amount. So those are the exciting use cases that I see come up on autopay. I think e-rupee will probably, e-rupee, by the way, is a manifestation of UPI autopay. It's one of the types of use cases on UPI autopay. It's a one-time mandate, purpose specific. I think there are very interesting use cases that we're trying to unlock. For example, what if every consumer durable loan can be given as a e-rupee voucher? So Tanya is a consumer. She comes to, let's say, I'm a lender, and when Tanya asks for a loan, I basically give an e-rupee to, or an e-voucher to Tanya, to buy a fridge, and Tanya can take that e-rupee to Chroma and buy, a Godrej or a Samsung fridge, right? So these are some of the use cases that I think will be unlocked in the next few months and years to come on UPI. On feature phones, I just have one last comment. Sorry, is that feature phone is actually a headwind, and I've talked about this many a times. People obviously ask this question, "Hey, UPI was smartphone first." Blah. Actually, it's not. Beam actually runs on USSD as well. If you use *99#, which is the USSD protocol, you can actually use Beam on a feature phone. The problem is that the underlying communication infrastructure, which is IVR call slash USSD slash SMS, which is the only way you can communicate on a feature phone, actually very unsecure, and they're also not reliable. So it's a headwind. While NPCI will continue to do innovation and continue to support *99# and so on, but I think if you look at the tailwinds of where the OEMs of mobile phones and telcos are going, we can assume and expect in the next 5 years everyone will have a smartphone, and feature phone as a concept will cease to exist.
Yeah, I think you've thrown enough problems at the product managers' faces today, which are good fodder for thought for them for the next few months for sure, without delving into feature phones and its future. But I think your insights are amazing. Looking at all the questions, I'm sorry we could not pick up all of them. Obviously, this was a super engaging session, lots to learn, and with your knowledge. And thank you so much for imparting actually some of it to us. I had a really good time, and as I said, from the looks of it, the viewers did too. So thank you very much, Nikhil, and thanks everyone for logging in. Until then, keep the spark ignited. Bye bye.
Thank you so much, guys.